Okay, next, we actually talk about in-depth analysis of your favorite counter. So, first semester, okay, again, I'm not repeating, but just in case we have new friends here. So basically for first semester, which is from Feb to June, right, the focus on in-depth analysis on as many company as we can. So the idea here is this, because I do understand, business analysis is something that is not easy to do. If you want to ask you to go and do the 6 tests for company, it's probably easier. So that's why, I spend this part. So hopefully after a while, you get the hang of how you do business analysis. So if you realize, again, it's actually quite a mechanical process. Okay, quite a mechanical process. So hopefully by keep repeating, so you also can get the hang of doing yourself. So for now, I will, every month I'll try to do at least 5 companies. And please let me know if this is getting too boring. Please let me know. I'll be happy to change. It's just that I think every time I do a company, there are new learning points. That's why I think it's still worthwhile. But if you think that, hey, this is too boring, every time talk about 5 companies, too boring, please let me know. Okay, now, so if you all can recall, in the last meeting, I've actually got you all to do a little survey, to actually do a little, what do you call that, feedback, to let me know what are your favorite counters. Okay, and we actually split them up into between Singapore markets, Singapore growth stocks, Singapore dividend stocks, Singapore growth stocks, or then US market and Chinese market. So of course, how I pick up the 5 stocks is a lot because of your choice, because of a choice. So hopefully, whatever stocks I've shared is also, because unfortunately not all actually give me feedback. I think about 20-30, I received about 20-30. Okay, but I believe it's actually quite representative. Okay, so at least roughly you know what are the stocks that is favored among most of the investors. I think we have actually quite a good sample size. Okay, and of course, I'll choose the 5 stocks from this list. Okay, let's talk about SG market first. So how I do this part is I actually use myself as an example. So again, just an example, how I will realistically choose my stock for this particular month. If let's say, for example, every month I want to invest in 5 stocks, for example, what is the process I'm going through? So of course now we have included more geography, Singapore, US and China. But having said that, even like China stocks, we can actually do it through Singapore SDR right now. Okay, so let's start with Singapore first. Let's say 5 stocks. I only can choose 5 stocks. Should I invest in Singapore growth stocks? Should I invest in Singapore income stocks? Should I invest in 1, 2, 3, 4, or 5 stocks? Okay, so a lot of time also depend on the market. So this is my quick review of how the Singapore market has fared. If you realize Singapore had a very good run over the past 1 year. So past 1 year, it actually went up by almost 22%, which is actually very good. Very good. Later you see relative to the Chinese market, relative to the US market, actually this is actually quite high. So if you ask me, I believe STI had a very good run. Okay, I shall not that I don't think it will go up further, but I think we shouldn't be too greedy. Okay, as in all things in life, you cannot expect everything to keep going up. Okay, if you ask me, I believe there's still some leg there, as in some leg to go up a bit more. I think some analysts are talking about 4,001, 4,002, which I think is highly possible. But then my point here is this, the risk of correction is also higher as STI goes up. So I will be a little bit also more cautious. Okay, so don't get me wrong, I'm not saying that I expect to correct back to 2006. No, I'm talking in terms of risk factor. Okay, so I think yes, Singapore market is actually still worth investing, but given that I'm actually more cautious, I probably will only want to stick to one stock. And of course, to be more cautious, I only want to stick to one income stock with dividend, which is a REIT. So especially when I'm expecting interest rate to come down. Huh? Okay, so how do I actually choose the stock? Okay, so after I have an overview of the market. I think that okay, Singapore now market very topish. Okay, so for me to be cautious, maybe I just want to choose one out of five, and of course, to be cautious, I will choose more of the income. So basically, the growth one, I won't be touching at least for this semester. This month. So for the different stocks that as you can see, these are the choices. So basically the numbers here are your choices. So for those who actually have gave me feedback on your favorite counters, I actually did a count. So this is what you all have chosen. Okay, these are the stocks that you all have actually chosen. So basically for REITs, the hot favorite is CICT, followed by Keppel DC and Mapletree Industrial Trust, as you can see here. Dividend stocks, Netlink, Hong Leong, and Sing Song. Okay. Dividend ETF, STI, Nico AM, and STI ETF. And these are the growth stocks. These are some of the hot favorites. So for those looking for stock ideas, this may be a good reference. Okay, end of the day, for stock price to go up, not only the company must be good, there must also be enough people to come and buy. So at least now you have a rough sense of what are stocks that's actually attractive to people. Okay, so for me to choose this time round, I actually have chosen, okay, before that, why I've actually chosen REITs instead of dividend stocks is because I believe interest rate is going to come down at least within this year. So as you can see, US Fed hold interest rates, but see two cuts coming in 2025. So I think the general consensus is we do expect interest rate to come down. Interest rate come down, REITs is definitely going to benefit them. Okay, and for among the REITs, I've actually selected Fraser Centrepoint Trust. Also, not that I actually prefer it, okay, based on this list. It's just that I believe over the years, over the past 1 or 2 years of investment gathering, I have already done CICT, Keppel DC, Mapletree Industrial Trust. So Fraser Centrepoint is one of them which I have not really done. So that's why I'm actually doing it today right now. Okay, so this is how I select my REIT. So of course, personally, if let's say my portfolio is zero, I want to buy a REIT today. Yeah, I believe yes, CICT will be my top choice. Okay, so CICT my top choice. Okay, today I'm sharing on Fraser Centrepoint just because these three I have sort of done it before, either last year or the year before. Okay, so Fraser Centrepoint is one of the REIT I haven't discussed for the longest time. That's why I'm sharing it here. Okay, Fraser Centrepoint. So same thing. We do business, financial statement, and pricing analysis. I always have this joke about Fraser Centrepoint Trust. It's always very ironical. Okay, so it actually started out with all the point. Like for example, they still have a bit left. Like for example, Causeway Point, Waterway Point. They just sold Changi City Point. Okay. You all know what's the irony of it? So all the point more in Singapore is actually in this REIT, except for one point. There's one very famous mall, also something point one is actually not inside. Anybody want to make a guess on which mall is that? Jurong Point, Centrepoint. Thank you so much. It's called Fraser Centrepoint, and yet the mall Centrepoint is actually not in this REIT. So I always thought it's actually very ironical. So anyway, now in fact later you'll see I think they are now one of the REIT with the largest portfolio of suburban malls, they call it. So all their malls are not in city center. Okay, so you have like for example Tampines Century is actually on the outskirts, Hougang, White Sands. I think the one closest to the city is maybe Tiong Bahru Plaza. So they are very mall denominated, as you can see. Currently they have 9 malls, and Central Plaza is actually also connected to Tiong Bahru lah. Okay, Kian, thank you so much for your sharing. And in fact, okay, Central Plaza is connected to Tiong Bahru, so it's an office building. If not, it's actually very mall denominated. Okay, so I also realized they used to own certain Malaysian REITs. I think they have some stake in certain Malaysian REITs. So the last I checked, they have liquidated that. So now, this mall is one of the REITs, or this REIT is actually one of them whereby they only have Singapore properties. Okay, so far I checked, only 3 REITs, out of the 39, only 3 REITs have only have property in Singapore. Okay, so the rest of the REIT, either they don't have properties in Singapore or they have a basket of properties with Singapore and some property from some other country lah. If you are looking for only a pure Singapore property REITs, only 3. This is one of them. Anybody want to make a guess which is the other 2 or not? So REITs with only Singapore property. Okay, this is one of them. Anybody want to make a guess which other 2 REITs are only a Singapore property and nothing else? Sabana, thank you so much. Sabana is one of them. Wow, I was thought this will be the hard one. Keppel TC, no. Keppel TC have a lot of REITs overseas. Of course, they have Singapore REITs, Singapore property as well. Thank you so much, Far East Hospitality Trust. So if you want a pure Singapore property portfolio, now you only have Fraser Centrepoint, Sabana, and Far East Hospitality Trust. So these are the 3. So again, I'm not saying that the rest of the REITs don't have Singapore properties. Of course, we have REITs with both Singapore properties and properties of overseas. But if you talk about pure only Singapore, these are the 3. Okay. Okay, now they recently sold Changi City Point. Okay, there's actually one learning point here. So when REITs, right, when they actually sold a property, okay, so the first question, if next time you all see this, the first question you want to ask here is this, what is the usage of the proceed? Okay, what is the usage of the proceed? If let's say, for example, they say, oh, I sell already and I sell it so that I can pay down loan or distribute to shareholders. Okay, it's something that, it should be a red flag. So let's say, for example, after they sell, okay, they say that, oh, you want to use the money to pay down loan or either that distribute to shareholders. It's actually a red flag. Anybody want to make a guess why? Why is it bad, to sell then after just to pay off loan or distribute shareholders? Anyone to make a guess? How come this is bad? Okay, why is it bad? If I okay, NAV go down if you sell. Okay, that's one. Okay. Thank you so much. What else? What does it tells you if let's say, for example, as a REIT, I sell already to pay down loan or either that distribute to shareholders. Okay, so CW got it right. So one is you actually bring down the NAV. It's actually very weird. Thank you so much. They're actually not growing. So the other concern I have here is this. Why you actually need to sell property to pay loan? Is it because the banks don't want to lend you money anymore? Okay, I'll be worried. Because usually, as an all businessman, you actually borrow as much as possible. Okay. If let's say you sell the property just to pay loan, I'll be worried is it because the banks don't want to lend you money anymore? And of course, most of the time as a REIT manager, you want to grow. Okay, it makes sense, right? If let's say you have more property under management, your management fee is also higher. So if you actually want to start selling property and reduce your property portfolio, is it that you don't want to you're earning less? Are you trying to slowly not interested in this business already? Okay, so yeah of course you can do it to reduce the gearing ratio but then again, you think about it, end of the day is the REITs manager so if they do that, they are actually reducing their own fees. So why would actually REITs manager want to do that? Okay, so thank you so much. So anyway, my point is this, these are the key things to look out for. So of course, Luckily, this is not the case. As we can see, after they have sold off, they actually use the money to go and buy, like as you can see, acquire additional 24.5% interest in Nix. Also, by the way, some of these properties, they don't have 100%. They don't have 100%. So with the money they actually gain from Changi City Point, they actually use it to buy. And in fact, the AUM has grown. Okay. So it's not really to just plainly pay off loan or whatever. So in fact, the AUM has grown. And thank you, Kiat Huyên, for sharing. So this is actually something quite new. They are now going to buy the rest of North Point City. Okay, they're actually going to buy the rest of North Point City. Yeah. Okay. So my point here is this: yes, they sold Changi City Point, but I think it's still okay. It's not something my concern because they are actually just uh recycling the funds rather than just to pay off loan or give to shareholders. So business I'm actually quite okay. So business analysis for REITs down here, the main thing you also want to know whether you like the malls or not. Okay, you like the malls or not. So personally, of course, compared to CapitaLand malls, I would say they are one notch okay, can I say that? Okay, a bit risky. So personal opinion. I think in terms of, let's say, traffic flow, in terms of neatness, you can sense the difference. Okay, like for example, I stay in Tampines. If you look at Tampines 1 and Tampines Mall, okay, in terms of the how is it being managed? In terms of the tenants, you can sense the difference. Okay. But then, the very interesting about Singapore malls here is this. So what I like is actually because most of the time it's quite close to 100% occupancy. You seldom see this kind of malls whereby, there's one huge chunk, whereby it's not rented out. Okay, so I'm actually quite okay. So of course, to each his own. If you think that, no, the malls, sometimes a bit weird, like for example, Century Square, you don't really have very, very big anchor tenant. Okay. Or to me, it's a bit luan. A bit luan. And then sometimes you have suddenly you have something else that pop up. Okay, but then regardless, it's actually still being rented out. You seldom have like empty slots in this mall. So I'm actually still quite okay. So so this one, no excuse. So a lot of people say that, hey, is the management of the company good or no good? That one we can't see but are the malls good or no good? That one you can see. You go into the malls, you can see, can touch, can feel. So you like the mall, you don't like the mall. So personally, I'm okay with the malls. Okay, definitely not my top favorite, but I'm actually okay. I think it's decent enough. They actually do quite okay. Okay, so in terms of business analysis, we also want to check whether is the income growing. So if let's say they will exclude Changi City Point, okay, why Changi City Point excluded? Because they just sell off, and Tampines One, why is it included? Because it was actually under AEI for the past 1 or 2 years. Okay, anybody want to make a guess what does AEI stands for? Or maybe help me here. What is AEI?
Asset enhancement something.
Okay, asset enhancement initiative, basically renovation. Okay, thank you so much. Asset enhancement initiative. So Tampines One, they was doing AEI for quite some time. So yes, it's affected. So if you actually take out the MPI actually went up. If not, you can see here the MPI actually came down. Okay, so that's why this particular REIT is still quite okay. Okay, again, definitely not my one top favorite, but it's actually okay, acceptable. Okay, so why I choose this is because you have chosen enough people of you actually have liked this REIT. The DPU has actually came down. But as per my sharing last month, later I'll share with you again. It's actually not easy not easy to find REIT with DPU actually have increased. There are some. Okay, later I'll show you again. But then if you only want to buy REITs with DPU increase, compared to last year, then you only have very few to choose from. So again, this one is something I can accept. So later we'll see depending on the pricing analysis, but this is something I'm actually okay with. Okay, so the last part about business analysis, like I said, the most important are usually when I look at the investor report. So by the way, all this information is actually gotten from the investor report. So I just share with you how I get all this information. Frasers Centrepoint Trust. Okay, so you just click on this. Under investor relations, then you have financial information. Okay, you look for the one with the financials. So usually I like the one with the financials. So 2024 financial result presentation. Okay. So usually the first few page, they give an overview. Okay, I basically just draw all my information from this document. Also, please, for those interested in reads, at least go and download this document and go and read about it. So the first part, the overview, right? Okay, what is most important is the occupancy. As you can see down here, 99% is very good. Okay, 99.7% is actually very good. So interestingly, retail in Singapore has been doing very well. Or if you ask me, 99.7% is actually doing very good. Okay, in fact, I don't even know where is that 0.3% coming from. So far, like, I visit Tampines 1 and Century Square very often. I don't even see much. Maybe just transition, but usually I don't see like there's an empty shop lot. Okay, so this one is very good for me. Okay, then I also look at the dividend profile. So over the full year, so maybe you also can do me a favor. Do you actually like the profile or not? Yes or no? So try to do a bit of exercise. Just look at the profile here. Okay, do you like what you see or not? Yes or no? So what I did is I just pull out the last 5 years dividend payout. Okay, Irene is okay. Charles is okay. Yes, I am actually, thank you so much. I'm actually think is yeah, I'm a little bit disappointed. So you can see, in fact, there is a slight decline over the years. So from the trend wise, 2022 was 1222, 23. In fact, after COVID, okay, came down, 2024 come down. So if you ask me, this is not exactly a good sign. Okay, but one possible reason could be because of the AEI lah. Okay, the Tampines one doing the renovation. So now that the renovation is over, there is a good chance that it will come up, especially when the AUM has also increased. Yes, this is in dollar amount, correct? This is in dollar amount. Okay. So sometimes you'll be asking that how I know. So is this good or no good? So we compare lah. You can do a comparison. I like for me, I still can find those REITs whereby the dividend you actually went, the dividend per share actually went up. Okay, so that's why this one, I wouldn't say it's super good, but acceptable lah. Something I still can accept because I can argue that the drop is not so significant and because of the AEI. Okay, so that is for business analysis. So next, financial statement analysis, same thing. I just look at these two ratio. Can someone tell me did it pass my test? Aggregate leverage 38.5. Interest rate cover ratio 3.41. So pass or fail my test. Okay, pass. Thank you so much. Aggregate to pass my test, less than 40%. Interest cover ratio to pass my test greater than 3. So this one, financial okay. I don't think they will have any problem with the banks. Okay, pricing. So again, same thing. I actually downloaded the average price over the past 5 years. Find average here. This average price. So I got a dividend from just now. And this is the dividend yield over the past 5 years. So I took out the outlier. Okay, the outlier because 3.7%, that's COVID period. I took it out. I do a simple average of the past 5 years dividend yield. So that's my fair yield, which is 5.4%, as you can see here. I've actually done this on Sunday, I think. Okay, the price then is about 220. If I use the past 12-month dividend, which is this 12 cents, current dividend yield is 5.5%. So basically, the price is actually traded about quite fair. Quite fair. So in that sense, okay, so to me, this REIT is, I'm okay with the properties. It's not spectacular, but I think it's acceptable. I think the performance-wise is also quite acceptable given that the dividend has been coming down. Okay. So it's a so-so rate, which I put it such that I don't mind having it in my portfolio, but definitely not top of my list. Okay, so this is the conclusion I have for this particular REIT. It's something that I think is acceptable, but definitely not the top portfolio. So just recap of what we have discussed last month. I have actually done the rich watch list. So for those who actually want to have a recollection, the videos are available. You can actually just go and check out the video for last month one. I actually created a rich watch list. So this is top of my charts. All this 6 particular REIT. So why are they here? Mainly is because you can see that their DPU is growing. So in fact, there's only this 6 REIT. DPU is actually growing. Okay, and obviously there's an MPI growth. So this will be top my choice. This one is a higher risk. Okay, why the DPU may not be growing. Okay, but then they have high dividend yield. Yeah, you can see it's at least 7%. So this will be my second favorite. So for the remaining ones, okay, these are the remaining ones I can accept. Okay, and for those who are actually not inside these 3 lists, that means those are the REITs I won't touch. So Fraser Centrepoint actually belongs here. Okay, so it's something I can accept. It's definitely not my top choice. Why I actually go through this presentation is actually because it's your top choice. Okay, it's your top choice. So I just want to highlight this. So there's enough people select out there. Okay, as you can see, there's enough people who actually like these REITs. Also, this is why I'm actually putting up this presentation. But assuming that I have nothing in my portfolio, okay, it's definitely not my top choice. Okay, but having said that, assuming that I have already bought all the REITs here, assuming that I've already have all the REITs inside my portfolio, I already have all of these REITs in my portfolio, yes, I will actually consider Fraser Centrepoint. Okay, once again, I know I repeated this before, diversification is actually more important than buying things that you think is better. Okay, so again, so let's say, for example, I already have CapitaLand Integrated Commercial Trust inside my portfolio. If today, even I think that CapitaLand Integrated Commercial Trust is so much better than Fraser Centrepoint, I should still buy Fraser Centrepoint because of diversification. Because end of the day, for us, the best way to manage our risk is actually still diversification. Okay, what we think may not be absolutely correct. Okay, so this is my analysis for the first stock. I've actually talked about, how I actually, if let's say can only invest in 5 stocks this month, why I only select 1 stock for Singapore, and out of this 1 stock, why I actually choose a REIT, and out of the REITs, why I choose Fraser Centrepoint Trust, and after that, I do the in-depth analysis of this particular trust, and the conclusion is acceptable, which of course, if let's say I already have done REITs, is something I will definitely put in my portfolio this month.